up, you guys? I hope everyone is safe and healthy out there as we navigate through our current pandemic. So I wanted to make a video giving you an update on what's going on with the Federal Reserve. Now, you may have heard of the Federal Reserve, as some people say, the Fed. Even though you may have heard the term, you may be wondering to yourself, well, what is it and how does it affect you? Well, to break it down, the Federal Reserve is the central bank of the United States, and even though it acts as an independent agency, it's still a part of the federal government. It's, as some people call, the bank for the banks. The goal of the Federal Reserve and their chairman, Jerome Powell, is to encourage high employment and economic growth while also keeping inflation under control. I mean, have you ever wondered why the price of goods and services are continually increasing over time? Everything's getting expensive. It's always going up. Well, if the answer is yes, you're not alone. Many people wonder and ask the same question, and this is basically due to inflation. Inflation is the rate at which the cost of goods or services increases over time. Now, although prices can fluctuate for many reasons, inflation is a result of an increase in the supply of money, which is usually due to actions taken by the Federal Reserve. As more money becomes available, the purchasing power of a single dollar drops. As the value of currency or money decreases, the price of goods and services increase. Inflation affects virtually every product and service. So for example, in 1970, the average cup of coffee was 25 cents. Since then, the price of coffee has increased to an average of $1.59. This is due to inflation. So again, one of the main purposes of the Federal Reserve is to keep inflation in check. They aim for about 2% or less per year on inflation. To accomplish this goal, the Fed has a number of tools it can use, but one of the most important and major tools they use is its control over interest rate, guys. Interest rates, which is basically the cost of borrowing money. So when the Fed raises or lowers interest rates for the banks, it impacts what the bank charges us, consumers, for everything, including credit cards, auto loans, and home mortgages. These are all affected. The actions by the Fed directly impacts our economy. For example, if the economy is not doing well, the Fed will typically lower interest rates to encourage business expansion and increase consumer spending, which can help to kickstart a sluggish economy. Well, this is what we have seen the last couple months. Feds have slashed interest rates to nearly 0%, guys. So when this happens, the cost to borrow money is extremely cheap. But if you are a major saver, you'll be getting virtually nothing on a regular savings account. So when rates are low, savers are losers, and those who borrow, who spend money, enjoy very low rates. Well, the latest news from Jerome Powell, the Fed chair, is that the economy will likely need more support from the federal government for the recovery to be considered robust. He stated he feels there's a need for more stimulus for a robust economic recovery from the coronavirus crisis. He also stated that it may well be the case that the economy will need more support from all of us if the recovery is to be a, I quote, robust one. Now, when he was asked, will there be a need to do more, he said that he thinks the answer to that question would be yes. I mean, guys, the Fed has taken huge action to provide support, including cutting its benchmark interest rates to nearly zero and launching programs that total up to $2.3 trillion for households and businesses in need. So one of the main takeaways from this latest meeting is that they stated they would need to maintain its current interest rate between 0% and 0.25%. What's even more interesting, guys, is that it pledged to keep rates to near zero until full employment returns and inflation gets back to the Fed's long-stated 2% goal. So if I'm reading in between the lines, guys, and just thinking about the bigger picture with this pandemic, I really think it is safe to assume that rates will remain low, likely through the rest of the year, through the rest of 2020. So if you are in a stable financial situation, now would be a good time, an awesome time to think about refinancing or renegotiating any debt you may have, car loans, mortgage, or credit cards. Also, in the recent press release, the Federal Reserve Board indicated that the coronavirus outbreak is causing tremendous human and economic hardship across the United States and around the world in general. The virus and the measures taken to protect public health are, and I quote, leading to major decline in economic activity and a surge in job losses. I mean, when you consider what he said, it's so very true, and I personally feel so bad for all the people out there who are out of work right now. Think about the restaurants, airlines, hotels, casinos, lounges, clubs that are all closed. That is a huge loss of revenue, a large loss of economic activity. The board also stated that the disruptions to economic activity here and abroad, and I quote, significantly affected financial conditions and have limited the flow of credit to U.S. households and businesses. Additionally, they stated that the ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term, and pose considerable risk to the economic outlook over the medium term. So guys, I think the biggest takeaway is that the pandemic is going to have lasting economic consequences. Even if we are able to reopen our economy, the damage has already been done, guys. It's already been done. And I really feel it's going to be a while before things are going to go back to pre-pandemic status. I definitely think we're going to have a new normal for a while, so we will all have to just adjust and roll with the punches. So there you go, guys. I hope this update provides more clarity on what's going on right now with the Federal Reserve. I think this is an important topic to cover as it overlaps with business and finance, which is what I'm making content for on this channel. So anyway, guys, what do you guys think about the recent actions taken by the Federal Reserve Board and the government? You think that more needs to be done? What would you do? I would love your input. Please comment below. Also, if you found value in the video, please give it a like and share, and also subscribe to the channel as I am providing updates on a weekly basis. Thank you so much for watching. I hope that you guys have a great day, and until next time.